Hey traders, it's Theo here. Welcome to our weekly market breakdown. In this video, I'll walk you through the key setups I'm watching, major levels and trends, and what the fundamentals are telling us for the week ahead. If you want to stay sharp and trade with confidence, definitely this is for you. Let's dive in. Let's start with the euro against the US dollar, and first we want to check on the weekly chart to get an idea of how the week ended. The previous candlestick was a long bearish candle with a considerably large real body, rejected the 10 weekly period moving average, and this has bullish implications. Now, based on the candlestick form itself, we might going to see some rejection here, as I pointed out on the 4-hour time frame. The price came to test all this area close to this bearish Marabozu. It was a long drop, started from there, and now the price rejected the 78.6 Fibonacci level. So what it means for the euro is that we might going to see further drop to the downside, but there are some key levels of support to monitor here. The first one we will give, it's going to be this area around this bullish Marabozu candle, because we have a fair value price formed here, and after this consolidation the price broke to the upside. That's the first one to watch. Okay, next one, if the price drops further, moves downwards and breaks below this support, then definitely we're going to visit the middle of this bullish Marabozu, and the ultimate area we're going to watch for some potential take profits, it's going to be down here, which is the previous week's low. Next one on the list is the sterling. We see during the New York trading session, actually prior the New York trading session, the sterling pushed to the upside, and that was a news event driven move. Why? Because as you see here, where is it? The official bank rate reported by the Bank of England found the UK with lower interest rates this time. From 4.25%, they dropped them down to 4%. This can have negative impact for the sterling, but always we need to check if the market follows through. In this case, so far, 72 pips were made on this currency pair, the sterling against the US dollar. The price obviously wants to retrace a bit of this move. The market was moving with lower lows and lower highs. There are a lot of fair value prices to be filled. The one up here, the other was down there and filled yesterday. Now the price reached this 61.8 Fibonacci retracement. It's also coming close to the previous week's high. If we see rejection here, we can drop down to the lower time frames, like the 1 hour, 15 minutes. If you're going to trade the 1 hour, look for reversal price actions that they can support bearish momentum. Or if you're going to drop down even to 15-minute time frame or 5-minute chart, you can look for change of market structure. Now the price, it's on the rally, it made a fresh new high, so this become the ultimate low. If we see anything, let's say from here, we want to see the price breaking below this low before we look for further weakness. This actually can be a promising one. What you want to combine though with that is that yesterday we had a kind of negative services purchase manufacturing index in the US, and that negatively affect the US dollar, and simultaneously the market depreciated the US dollar. So it caused strength on the sterling against the US dollar, on the euro against the US dollar, but the one that got favored the most, it was the Australian dollar. On the weekly chart on the Australian dollar against the US dollar, we see that the price created this long bearish candle. This has bearish implication, and if we're going to see some kind of weakness, we're going to see it from now onwards, because we reached the middle of this bearish candle. Usually the middle of a bearish Marabozu candle act as a strong resistance. On the 4-hour chart, the price found support here, previous week's low. It created this equal bottom. At this point here, the market changed its market structure. We had a new fresh higher high. Also, that followed by the break of an important trend line, and as I will point it out right here, from this, not from that high, but from this one here, we had a clear trend. Look at these guys. The market made lower lows and lower highs, downtrend. Then it tried to make another low and was unable to make another low, and this bullish Marabozu candle broke above the neckline, and it set up the tone for further bullishness. Look at look at this one. The price visited the middle of the bullish Marabozu and then it exploded to the upside. So by dropping down time frames and finding some great opportunities, let me walk you through. Let's say hourly time frame. Actually, hourly time frame is one of the best time frames to trade price action on major currency pairs, because the price action on the hourly time frame used for executing purposes, it becomes very promising, and you better check it out. If you are a trader of a 5-minute chart, let's go a little bit backwards. Yep. After we saw this Friday non-farm payrolls explosive move to the upside, the market, look at this, retraced 61.8%. It found support right at the inside support. The broken swing high acted as support, double bottom here, and the market kept on rallying. So we had a great opportunities to trade long the Australian dollar against the US dollar, purely as per price action and market structure. Next one on the list will be the USD against the Japanese yen. On the weekly chart, the price is screaming to sell the US dollar. It's one of the best price action combination you can find in any time frame. Why? Because the market is in an overall downtrend here. Multiple levels of resistance, they got rejected, and this price action with a long upper tail and a very tiny real body cancel the bullish implication caused 2 weeks ago by this bullish price action with a long lower wick. See the difference? Long lower wick indicate the market is going to rally, but the next information came from a long upper wick candle. If you want a shooting star, if you want gravestone candlestick, however you want to name it, as long as you understand that it has bearish implications, I'm happy to I'm happy for that. So next one, on the 4-hour time frame, the price consolidates. It's in a trendless environment here, but for me, it still has bearish implication. What we didn't see though is the middle of this bearish Marabozu candle to be filled, but again, maybe the price is going to come down here to grab some of this liquidity sitting underneath the previous week's low before it's going to bounce it off. Anyhow, I'm more bearish than rather than bullish on this one. Next one, USD Canadian dollar. What happened on the weekly time frame? The price appreciated the US dollar last week, although on Friday we had the rejection due to the non-farm payroll. This week started with a strong Canadian dollar. We see that the USD is dropping against the loonie. On the hourly time frame, the downtrend development since last Tuesday, lower lows and lower high formation. Prior to the New York trading session, we have a bullish Marabozu here rejecting the previous week's high, and it can act as support. So let's see what's going to happen. Now the market is in a more consolidation phase, but based on this one here on the 4-hour chart, we are more bearish than bullish. If the price now moved upward, this area here will be your first area of resistance. If you are holding long positions, understand that this area can cause the market some downward momentum. Finally, what's going on with the USD against the Swissy? The price 1 month ago tried to create something significant. If I zoom out as much as I can, 2011, guys, 2011. Who was trading in 2011? The price here, even me trading for 12 years, I wasn't trading in 2011. So the price here tried to make all times low. It's like when we say for Bitcoin to have the all-time highs, here we have the all-time lows. So do your maths. Now, what's going on here is that the price, it's in a downtrend, and it has more bearish than bullish implications. As we know, or if you are new to trading, I'm telling you now that the Swissy, it's been respected for decades now as the safe haven asset, more than the Japanese yen, more than the euro. Swissy, it's on the spot. It has the biggest reserve on gold as per the latest information from the news and from the press. So because we have uncertainty going on in the world, as you know, the Swissy hold very well, and it was appreciated a lot. Now, As you know, for every downward move, we have the retracements follow through. Depends on which time frame you are watching that. It might take weeks, it might take days, depends on the time frame. Now, the positive fact is that in this case, the price tested this broken swing low and it dropped. So we can assume that if the price now keeps moving downwards, because it's bearish, it's more bearish than bullish on the 4-hour chart as well, we can see further more continuation. Now, I will give you the first target. It's going to be this one here, and that's the previous week's high. But also, if the price declines further, I'm going to see this inside resistance, the broken resistance, to be the first area of support. Okay, so mark this on your chart or come back to this video to check it again. Next one, Euro Japanese Yen. This one here, guys, it's been ages. 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row. The price didn't want to even make a lower low on the weekly chart. But last week, finally, we had a bearish engulfing candle because we really need some retracement here. Even on the weekly chart, the market is going to create retracement. So it's going to come anywhere between 50 and 61.8 Fibonacci. I see more than 61.8 because it coexists with this swing high. So how it's going to look like on the 4-hour chart and on the hourly time frame, it's going to look like a downtrend, strong downtrend as well. What I like to see at this point is that the price trying to make this non-failure swing. If we're going to have a lower low here, next target is going to be 170.6 round right there. So let's see how this is going to progress. Of course, we're going to be here every single week. We make these videos, so you will get informed and you're going to be updated about everything that's going on. Next one on the list is the gold. This week, it's expected a nice bullish move on the gold because of this bullish hammer rejected not only all the support, but also the 10 weekly period moving average. 10 weekly period moving average, it's the equivalent of the 50 daily moving average. I don't have the daily moving averages here. On the daily, it looks very messy, but if we drop down time frames on the 4-hour chart, the price created this, how I teach in my courses, the non-failure swing low right here. Then it made a higher high and now it's on its way upward. If you are trading intraday, let's say 5-minute chart, we are right in the heart of the New York trading session. This becomes your first resistance. So if you are long here, you have nice fair value prices here. The price, it's already visited the middle of this bearish Marabozu candle on the 5-minute chart. So if it's going to keep rallying, here it's your first area of resistance and you better manage your risk accordingly. Even on the 1-hour time frame, you have multiple entries. The last one was right here, right at support, also an upward trend line, bullish engulfing printed right here, and it was the best entry in my observation. Now, what is going on with Nasdaq? Bearish engulfing last week. I think that's the all-time high. Yep, as you see here, that's the all-time high. Bearish engulfing. The market didn't want to drop. On the 4-hour time frame, we see multiple higher highs and higher lows. Count how many bullish candlesticks here and count how many candlesticks, how many bearish candlesticks. So the buyers, they are considerably outperform the sellers. Next area of resistance, it's up here, but the price doesn't go upward in a straight rally. It takes some time to move upwards, and we have to make our risk management calculations in order to avoid bad entries. What's going on with the 15-minute chart is that the price, it has we still have an hour for the cash market opening, so we need to see how the price will react. During the Asian trading session, there is an unmitigated area down here. We don't know if today the price will tap into this area, but also during the London trading session, a very, very promising fair value price is fitting right there. Some of you may call it fair value gap, whatever, because I'm a professional market analyst, not only just a trader. This is what we call fair value price. Okay, if you have any questions, please comment on the video below and I will make sure to reply. So let's see if the price will tap into this area. It also coexists with the Fibonacci 61.8. Look at, guys, how magically this Fibonacci works. So we have a strong level of support printed there. If you are trading the US 30, very similar scenario, bearish engulfing right here on the weekly chart. The market didn't really do anything. 4-hour time frame, It filled up this gap right there. Let's see what's going to happen. Maybe this can be more interesting rather than the Nasdaq. We have this upward trend line. The market is in an uptrend. This is the hourly time frame. If we drop Fibonacci to find the potential areas of support, we can say that the zone is between the 50 and 61.8. The way the price moved upward was with these long bullish candlesticks. Each one made higher high and higher low with the previous one, and this shows a very strong uptrend. So let's focus on that one this session, and let's explore how the market will react. And of course, it's time to check some of the cryptocurrencies. Let me show you one of the most powerful price action patterns to trade generally. When you are bullish and you see a bullish, bearish, bullish candlestick, this three candlestick combination, it shows that the next candle or the next at least two candlesticks, they're going to explode as bullish. This can happen to any time frame, name it, 1 minute chart, 5 minute chart, hourly time frame, daily time frames, everywhere. Okay, it's one of the most promising price action patterns. Bitcoin has bullish implications compared to the overall picture. The market retraced back, filled up this fair value price, and then it bounced it off. We start seeing more bullish candles rather than bearish candles. The next area of resistance is going to be right here between 118 and 120. Ethereum it wants to definitely outperform anything on the markets lately because it was very underappreciated. Why? Because the Bitcoin created all-time highs recently, the Ethereum didn't. So look at where is the all-time high in Ethereum. It's since 2021. Thus, the price made the all-time high, but it didn't test it this year. The Bitcoin, when it was July 15. It made a new all-time high. So the Ethereum now, it's going to rally to catch up. And the traders and investors, they have more hopes that the Ethereum is going to give better runs compared to the Bitcoin. And this is why they are heavily overload the Ethereum. Solana, on the other hand, also it had a deep retracement. Now it looks like that it finds its way to bounce it off. But because the retracement occurred during a downtrend formation, we need to see the price breaking above this trend line. This is going to be the first sign that this market is going to continue to an uptrend. First, we need to see the break of this important trend line. Then we need to, going to see some kind of retracement or consolidation. And if we're going to see a new higher high, then definitely the market, it has some good potential to move and test this weekly high. Regarding the fundamental news you need to be aware of for the week, it was today, of course, the interest rates report by the Bank of England. Yesterday we had the unemployment rate by in the New Zealand, and it increased from 5.1 to 5.2%. On Tuesday, the ISM Services Purchase Manufacturing Index dropped, and at the same time, the US dollar experienced more weakness, followed the non-farm payroll weakness last week. And on Monday, we had the Consumer Price Index on a monthly scale in Switzerland, and 0.2% was expected to drop by almost 0.5% to go to minus 0.2%, but it stayed at 0%, although that had negative impact for the Swissy. And for tomorrow, you're going to be aware about the unemployment rate in Canada. It's expecting to increase by 0.1%. And we see that the new employment change is about to significantly drop by almost 5 times here. Okay, so let's be aware for some weakness on the Canadian dollar. If you are trading anything like EuroCAD, PoundCAD, maybe you can find some good opportunities there to go long if the market support it. That's your roadmap for the week. I hope it helps you to stay focused and ahead of the curve. If you found this useful, drop a like, subscribe, and feel free to share it with another trader who needs it. And remember, it's not about predicting, it's only about preparing. See you in the next one.